Well, hello and welcome to another video where we're taking a closer look at the market strength indicator from quantum trading. And I hope by now you've managed to watch the introductory video where I covered the basics of why and how we develop the indicator and the principles of some of the essential principles of how to use the indicator. And in these videos that I'm putting together, I'm really expanding that conversation, if you like, into other markets, looking at how we can use the MSI for different applications, and also how we can look at it in use it in more creative ways, if you like, rather than, as I explained in the introductory video, where very much like the currency strength indicator, if you're familiar with that from the world of Forex, where we look at the extremes, for example, for overbought and oversold, where we're looking for opportunities to get into a trade before the trend starts to develop. Or alternatively, we're looking at the indicator for jumping into an existing trend where the steepness of the line really describes that very clearly. Those are certainly two ways to use the market strength indicator in the same way. But what I've tried to do here is really expand the horizon, if you will, for the indicator by using it in different ways outside of perhaps things that you would think of intuitively. Now here we've moved to ETFs. We've already done, I've recorded a video using index futures, and in that one we were using the index futures coupled with the VX future. We've now moved to the world of ETFs, and I've done that simply to show you that the indicator works in exactly the same way, and I'll do further videos on stocks, commodities, all sorts of different markets, sectors, things of that nature, and you'll see that it really doesn't matter what the instrument is that you're considering. It will work on the market strength indicator, which we call the MSI for brevity, in exactly the same way. Here I've gone for slightly slower time frames because I'm conscious of the fact that we do tend to focus a lot on the faster time frames. So I've scaled back a little bit here, and I've gone to the 1 hour, the 2 hour, and the 3 hour, just for a change of pace, if you will. The 4 ETFs I've got here are the SPY, which I'm sure you're all familiar with, which is the blue line. We've then got the IWM, which is the Russell, which is the brown line. We've got the pink line, which is the Dow Jones, the diamonds, DIA. And finally, at the top, we've got the Qs, the triple Qs, which is the NASDAQ in the green. So those are our 4 indices, which, as you would expect, typically will tend to follow one another around, purely because they are covering the same risk aspect, if you will. They're equity markets, and therefore the risk on those should be pretty much the same. Now, that's not to say that they will follow one another around all the time. They do not, and we do get divergence. And indeed, this is another application of the indicator in that we are looking for both opportunities, but also knowledge of when an index or whatever it may be is out of balance with its partners. Generally speaking, of course, when you're trading stocks, indices, index futures, whatever it may be, ETFs, in terms of risk, you really want those primary groups to be flowing in the same direction. So if market sentiment is risk on, then really you want to see the flow of the river, which is the analogy I tend to use, which we all understand. The flow of sentiment is all traveling in the same direction. So the river is traveling from higher ground down to the sea. Because what that means, what that translates to, is lower risk for you as a trader and investor, because you are trading with the broad direction of the market. So the broad markets are all going in the same direction, which is pretty much what we have here. Over this time frame, you can see that the 4 indices are very much following one another around. And that, again, is another, if you like, application of the market strength indicator, because it gives you that information very visually, very clearly, and very simply. You don't need to have multiple charts here. You've got it all on one workspace. And of course, you can have this across multiple time frames, so you can see what's going on from the fastest to the slowest. I just happen to have chosen 3, but you can have 8, 10, whatever it is you wish. So that again is an application for the market strength indicator where we're looking at whether the instruments or markets are moving en masse, in other words, is the broad sentiment in agreement across that grouping, or are we seeing some divergence? Because if you're trading in an index where that index is moving against the broad trend, that is certainly something you would want to know, because the risk, whatever you're doing, if you're trading index futures or you're trading a stock in that index, it's fine as long as you know and you appreciate the fact that at some point that index may reverse and join the other group and join the general flow of the river, and that could happen at any time. Trading against the flow, paddling your canoe upstream when everyone else and when the river is going downstream is absolutely fine as long as you appreciate it, because the risk is that much higher. At times we will do it because it makes sense. For example, with the Nasdaq, over many in the last few months, certainly over the last year and a half, where technology stocks have been incredibly strong, we've seen days and intraday trades where the Nasdaq might be moving in one direction, and yet the ES, which is broader market, and the Dow, which is narrow market, might be flatlining or indeed going in the opposite direction. Now, absolutely nothing wrong with that. And of course, you'd be looking at the XLK sector as well to see what technology is up to. And provided you're following that multiple time frame analysis and multiple market analysis, absolutely fine. But you need to know that. And this is what the market strength indicator does. It really reveals that for you in this very graphical, very simple, very colorful way. Now, the other reason I've recorded these is to also show you the way the indicator works, where we have inverse markets. And of course, the VIX is a classic. It's a classical inverse relationship to indices, purely because of the nature of how it is derived from the options market in S&P 500. And here you can see it in operation. At the top here, we have our 4 ETFs. And at the bottom here, we have our future, the VIX, which is purely showing you exactly what it should be showing you, which is the inverse relationship. We have very strong trend up here for the futures. We get up to the top here. The VIX itself is down here, pretty much flatlining, oscillating around here. And as these start to roll over, so we start to see the VIX begin to climb. So that's on the hourly. We move across to the 2 hourly. Very similar picture here. We've got a strong trend for the ETF indices. The VIX is falling quite strongly down to the very heavily oversold here. And then as the indices reach overbought up at the top here, 92 up towards 100, which is very strongly overbought, they start to kick down. What do we see in response to that? We start to see the VIX kick up. And exactly the same over here on the 3 hour. We've got our 3 index futures moving together en masse, starting to flatline a little bit here. The Qs is starting to drop more dramatically than the other 2 at the end of the session, the end of the week also it happened to be. And the VIX is starting to recover from its overbought and reflect the fact that it is once again working inversely to the indices as we expect. So it really describes this relationship very clearly for us on this simple workspace where we have a lot of data, a lot of information, but it's all encapsulated for us in the one workspace very colorfully and very graphically. Now, in addition to this, of course, we will be looking at our time frame workspaces, and of course, we will be looking at our volume price analysis methodology relationship there. So let's just quickly go over to have a look at those. And what I've done here is just created 2 very simple workspaces based on standard configuration, 8 charts on each, 1 for an index and 1 for the VIX. So let's take a quick look at those. And here we are on the first of those workspaces, and I've selected the SPY. As you can see, we've got a variety of time frames. We've got the 1, the 3, the 5, and the 10 across the top, and then we go 15, 30 down to the daily and the weekly. And this will be a typical workspace where we would be applying our volume price analysis methodology. We would have other indicators on here as well. We might have our VPOC. We might have our accumulation distribution indicators to give us levels. We'd have our volatility. We maybe have our trend monitor trends. all those other quantum indicators that we might arrange on this workspace as well. But I've just kept it very simple, just with a price chart and showing the tick volumes indicator at the bottom. We just hop open to, I'm not going to go through all of these, we just open up one of these, just open up the daily, for example. There we are, and we would be looking at that from a volume perspective. And of course, if we look at this buying that came in very strongly, we're now at the end of the week, so we've had 5 days. So this is actually 6 days. So this was the buying that came in down here. You can see very high volume, nice little hammer candle there. We've got a nice wick to the lower body, lots of volume. So we know there's some buying coming in there. Is it going to continue through? We get a gap up the following day. Then we get a nice injection, nice widespread candle. And then it starts to flatten as we get towards the end of the week. But even so, we've got down days on the last 2, but the volume there is falling away a little bit. So we're starting to get back up to this level again, but it's not particularly strong. Certainly, we're not seeing the index rush up. And we're now coming out of summer and into the early part of the last quarter of the year, or last 4 months of the year. So it will be interesting to see if we see a break out into new high ground for this index and indeed the others. But certainly, as I say, be using volume price analysis methodology, of course, which underpins everything we do. The indicators are there to really support the methodology. And as I've explained on many other videos, really to draw in information which would be hard to put together, or more complicated, where you would require a lot of screens to pull all this data together. And it really does. The MSI and indicators like it really do pull this data together very conveniently for you in one workspace and make it very easy to see what is going on in terms of sentiment, more particularly across a broad variety of markets and instruments associated with the one that you are trading in particular. And as I've explained earlier, what I'm trying to get across here, the point I'm trying to get across here is to think a little bit outside the box when you're using this indicator, and to think how you can use it in unusual ways to really give you information which would be more difficult to put together in any other way, or take time to put together at any rate, certainly. So it's really looking at not only just overbought and oversold, the strength of the trend, the angle of the lines on the indicator, but also inverse relationships. Yes, we're looking at broad market sentiment as well, if we're seeing divergence there. So it's all these sorts of aspects I'm trying to put together for you in these videos. Very quickly, let's just hop over onto the VIX futures, which I've created in a similar workspace. And here we are, again, exactly the same. This is just the VIX futures. And if I just open the daily chart for the VIX, let's just pop that open. As you can see, again, because this is a future, we have volume, which is great, gives us an alternative view, something that perhaps we wouldn't see on other charts where volume is not available for a VIX index, but it is in the VX futures because it's a futures contract. What's interesting here is you can see we're down to 14.79 and starting to build in this very strong platform here of support at that level. So this is interesting. We've seen this is what the VIX has been doing. We saw the SPY was climbing. The VIX has generally been falling. What's interesting here is the narrowing of the spreads on the future, which suggests we might be coming to a bit of a pause point. So we've got decent volume here, but the spreads are narrowing. And if you overlay that with the level here that you're seeing of potential support, where we've seen reversals in the past off this figure, 14.7 or there or thereabouts, then potentially there is an opportunity for the VIX to reverse. And of course, if the VIX is going to reverse, then the inverse is going to happen on the indices, and they will begin to reverse lower as the VIX moves higher. So there we go. I hope you've enjoyed this video. Lots more to come as always. So thanks for watching. See you soon, and bye for now.